bears out with their claws. There are also hawks in the sky. Basically, the Fed. The Fed might be a little bit hawkish here. We're also seeing a crypto-friendly bank, Silvergate Bank, collapsing. And guess what else is going really badly for crypto? Potentially, it's all that Bitcoin from the Silk Road. It might be hitting the market soon. So that might get a lot of people nervous. What does this all mean? Joining us now to discuss the crypto markets is Bitwise crypto analyst Ryan Rasmussen. Welcome, Ryan.
Hi, thanks for having me.
Glad to see you. So we just had the jobs report come out. 311,000 jobs added in February. That's significantly higher than the 225 or so that was expected. We also had the unemployment rate is a little bit higher at 3.6%, but that's still really low for all of us who remember unemployment rates much higher than that not so long ago, just about a year ago. So what do you think this is going to, what kind of signals are you getting here? Do you think the Fed is going to raise? Yeah, exactly. Do you think we're going to see the Fed raise 50 basis points next week? Or do you think that we're at a point here where they might be like, hey, there's a lot of chaos going on in the financial markets. Let's just take it easy with just 25 basis points. What do you think is going to happen? What does that mean for crypto?
Yeah, there certainly is a ton of chaos in crypto markets, a lot of negative headlines this week and really over the past year. But I think the most recent jobs report coming in, hotter than expected and signaling what we heard Jerome Powell talk about this past week, which is that they're going to be monitoring this data and that's going to drive their interest rate policy going forward. So now I think, despite there being some positive market movement today in response to this, I still think everyone's eyes are on whether interest rates are going to be, raised 50 basis points or 25 basis points next week, like you mentioned. And yeah, I think that they're going to be more aggressive or as aggressive as they have been. I think for a while we were seeing the market price in hopes that the rate of increases was going to be slower. But given the strong economic data, given that the economy is still ramping up, I know there's a lot of trouble in the financial sector today, and that's largely driven by the interest rate environment. But I don't know, and I don't foresee the Fed slowing the rate at which they're rising given this recent information.
Well, to be sure, that was 25 basis points at the most recent hike, but you think about 50 basis points, I assume, correct? And that said, we see Bitcoin at about 20,000 now, a little bit above 20,000, but it dipped below. Do you think that 20,000 will hold, or do you think that actually the dip below 20,000 is a sign that, yeah, guys, get ready for 18?
I do think that the dip below 20,000 for Bitcoin, the dip below 1,400 for ETH that we're seeing is a sign that markets are watching the macro environment very closely. That's driving a lot of the price action in crypto markets today. And so I do think that we'll see a bit of selling off happen once rates are rising next week, if that's what happens. But I'm still positive on the long-term outlook of crypto. I think that overall, when these things happen, we start to get signals ahead of time, and that's kind of what's happening here. And so I don't know if markets will, fall down to the 16,000 level, but I definitely could see things falling, down to 19K, 18K for Bitcoin.
And there we are, 19,950.
I saw in your notes that you actually think, in the long-term picture here, this is just going to be a lot of noise when looking back, and that we should be looking at this through crypto cycles. So maybe go into that and where we are in the cycle now.
Yeah, it's very true. If you take a look at crypto over its entire history, it's been one of the best performing assets of the past decade. Normally, that performance has rolled in 4-year cycles. And so we've seen 3 years of strong crypto price action, a lot of technological developments in that time frame, followed by 1 year of prices really resetting. And so what we're talking about when we speak with advisors and answering questions around where markets are headed is that this is a great point in the market to make that allocation to the portfolio. And so, yeah, we're really excited about the long-term outlook. The fundamentals of crypto, despite the price action, are really strong. Developer activity and improvements to the technology like user experience upgrades and scaling is really going to drive the long-term outlook for the space. And so, 2022 was a big reset year, and we think that 2023 creates a great opportunity for institutional investors who have been sitting on the sidelines to finally make that allocation into the crypto industry.
Mm-hmm. And so where are we right now in terms of this cycle compared to other cycles?
Yeah, we're right in the beginning of a new cycle. And so it's been 4-year cycles. The end of the last cycle would have been 2022. That's when we saw a huge drawdown in prices, 90% drawdown in prices from all-time highs. It's not something new to the crypto industry. We've seen this before. And so, like I said, we're kind of in that reset period and just falling out of that reset period. Obviously, the macro environment is having a lot of drag on overall markets. But as soon as that turns a corner and starts to see some tailwinds, I think that crypto's really set up. Being in the first year of this new 4-year cycle, I think it's really set up for growth over the next few years.
So your view is, in looking at cycles, there is one piece that is different this time, and that, of course, is more regulatory scrutiny than we had in the past. There's a potential that we might see something coming up from the feds, let alone this case that we just saw in New York that may view, if the New York Attorney General is successful, view ETH as a security. But do you think that these kind of headwinds, do you see that as a potential risk to that cycle at all?
Yeah, I do think that it could prolong the down part of that cycle a little bit. Ultimately, as the professor who was just on was talking about, we've seen this type of regulatory headwinds play out in other emerging asset classes in the past. And the hope is that regulators would start to see or start to understand that crypto innovation really does, and we want it to live within the United States. And so pushing that overseas, as you were talking about, is really just kind of squeezing one end of the balloon for it to pop up somewhere else. And so I think crypto is broadly a global industry, and there's a lot of positive regulatory development happening in China. Europe is also having positive regulatory development. It's unfortunate that the United States regulatory environment really isn't friendly to crypto, but there's a lot of crypto cases kind of going through the courts today. And I think that what we're seeing is that some of these arguments in court are actually leaning, it seems, in favor of the crypto markets. And so while regulators are standoffish towards crypto, we're hoping that we have some policy and some outcomes in the courts that really show that crypto is here to stay and that crypto is a net benefit for society.
All right. Ryan, we'll leave it there. Thank you so much for joining us this morning. That was Bitwise crypto analyst Ryan Rasmussen.